All right, hey John. John, I'm just after sitting through that and downloading that spreadsheet you downloaded for me. I wanted to give my input on that for you, and if you want to share it with anybody else, I'm okay with it. But mainly, I'm doing this for you. So basically, this is the sheet with the income. Basically, took it off of whatever, just copied it. And we made an Excel sheet out of it, right? From a whatever the program you're using there. Anyways, this is the same information. However, I've kind of structured it. I made some changes, and those are changes like this right here, this here, and this here, and this here. So no changes, but just identifying them basically. But this is definitely a total change right here. Okay, and then these total columns that I've made for us to find out what our percentage is for all of this. So this is the electrical department. So bottom line is your gross profit is 71%. However, that's without labor expense. So I'm assuming that this labor expense is the lines right below it. Okay. So we had 36,000 in sales between electrical maintenance, electrical sales, electrical service, and electrical other. Okay. But we had $10,000 in material, or that would be, let's see what your biggest one is. Yeah, material cost right here is the only one you have. This line 12 is your only material cost. So it takes it from 36 to 25 with that 10.7, $10,700. Okay, and then you've got your payroll expense. So I'm assuming because this gross profit should have payroll above the line, and it does not. So that needs to be addressed at some point. That's just not normal business practice for this industry. You've got material and labor above the line, and commissions above the line. So commissions, I think commissions were down here, maybe they weren't even identified as commissions. So it's hard to say what commissions were. I think I made, as we come along and we get through it, I'll find out where that was. Oh, here it is. It's on the line. I'm just saying that this is basically commissions and labor, I would imagine. So here's our labor expense. So we went through, they identified this gross profit up here. It really should be coming in down here. Okay, the true gross profit for this department is truly $12,000, not $26,000. That makes it 71% of the sale. And here's our labor expense. So that's not true. The true gross profit is 34%. And that's a big difference because our labor cost here is 66%. I'm not quite sure where this comes from. Oh, I'm sorry. This is labor and material. My apologies. This right here is adding up the labor and materials here. Okay. So you're taking this $24,000 off of this, which is going to leave you 12, which is really a 34% gross margin for the electrical department. Now, electrical department should be around, the plumbers around 57, 50, 64, in between there somewhere. Now, your generators sales are going to drop that because it's a larger install with a larger piece of material, and that material will be addressed up here. So your service should be 57 to 64. It's going to fluctuate in there, and the installation so should be coming in around 47 to 54. Okay, and that'll just be an indicator for you to see whether we're on track with our pricing, and that just depends on what the equipment cost is. You know, the least equipment cost there is, as you know, it's a less expensive thing. It's be closer to 54%. If it's a high material cost or a project job like something specialty, whatever that is, that'll bring it down to about 47. But it shouldn't fluctuate too much between there. So just giving you that indicator, giving you the high and the low here. All right. And I want to also hit these dots here. I put these little red triangles in there. Gross profit equation is missing the labor piece. So this isn't a true gross profit. So I put the labor piece in here, assuming that this was the labor piece. Okay. And so I'm assuming commissions are lumped into labor and direct, are lumped in direct cost. I see no commission line item in here. So I'm not sure where that's being done, but there should be a commission line item in here for that. It's because it's important, because you really need to know the difference between the sales commission, and that comes from job costing every job. Okay. And that sales commission is going to slide down as profitability slides out of it. And so they're not just, we shouldn't be giving them 10% just because they sold something and they made no money. Okay. There needs to be a sliding scale of profitability with the sliding scale of commission that they get. So, and I got a tool that helps you with that if you need it. Let's see. So this here, now the true gross profit in this department, like I said before, it's 34% after we put the labor in it, not 71% as advertised. Okay? So then let's go on over to the HVAC department. So HVAC is, again, they're showing gross profit at 73%. Well, shit, if that was the case, they need to take us all to school and show us how to do that. But that's not going to happen. Okay? Because we've got no payroll in this thing. All right, so I'm doubtful in some of these numbers. You got how much income do we got here in the that service income, replacement income's 89,000, and equipment and material that's probably close. Okay, so got a total sales of all three departments 129, and with the material cost you're at 94. So your equipment and parts are costing you. That's what this is right here. Okay, and any refunds, those are costs to you. So you've ended up with this prior to having labor. So now when we put labor into it, we're at 30,000 off of this, and now we're at 65,500. That's a 51% direct cost. Okay, and that's going to give you your gross profit of 49%. Now that's really good. Like I said, it's between these installs are going to be between 47 and 54. So right here, I'm feeling really good about this. And I don't know enough that these numbers are correct, or I'm sure they are, but I don't know. It's something we need to vet out each month just to verify that. Okay. And then when we come over here to this payroll here, if this is the true payroll for installs, 23% for the install. I'm going back in time here on this one. I believe that's going to be okay. I'll have to check my numbers on that, but generally I see it around this number right here. I'm just wondering what this is. Mine was fully burdened, so you have this employee benefit burden. We need to make sure we get that employee benefit burden put into our pricing. So doing our profit pricer. Sometimes this is left out because they don't know what it is. But we need to make sure that we understand our employee benefit burden as well. Okay. And that's moving this thing up to 23%. And that's, without seeing it, I don't know what the answer is. This 17 is okay though. Okay. And then, so that's going to give us a 49% true gross profit right now. So that's good. That's good. Okay. We'll come over here to the plumbing side. And the plumbing is they're saying gross profit's 55%. Gross profit on plumbing should be 60 to 63% on the plumbing side of things. We're at 55, and we don't have labor in it yet. Okay, so this is the one that really spooks me a little bit. This must be a very, very brand new department. Not quite sure, but just showing you what I only know the numbers. I don't know how long you guys have been in the plumbing business. Okay. So when we add the labor back in there, that's 65%. So we're at a 9%, a negative 9% gross profit in plumbing right now. Okay. So that's a booger. Is when you put this 31 together, that's labor and material. Where they're getting that is from this 18 on the payroll expense and commissions, and then there are 12,000 here in material cost. So that's making that 31,000, I believe. You can double check me on that, but I'm pretty sure that's what that is. Yeah, it's 31,572 to be exact. Okay, so our gross profit is a negative 9% here. So on the plumbing side, we need to have a conversation about the plumbing side. We need to look at how we're priced on the plumbing side. Tracking the efficiency is very important. The sold hours, when we calculate how many hours are sold from the price book, we may need to adjust some of the task times in these price books. It sounds to me like I haven't seen plumbing ever lose money. I just haven't seen it. So this is just drastically wrong. So I got to believe there's something wrong with the pricing in the price book for plumbing right here. Okay. And with that, let me see if I've got something else here for you, brother. Overhead expenses. I'm going to assume that these are overhead expenses and not direct cost, because I found this category up here, payroll expense. So they should call this direct cost so that everybody understands what it really is. Payroll expense. What the hell does that mean? We need to understand it by department. So plumbing, payroll expense, plumbing service, HVAC install. Every one of these departments need to have their own KPI for what labor is as a percentage of sale. And they're just lumping this all in. So I'm not sure what to make of it. Okay. And I'm trying to make something of it by this payroll expense. This was in overhead, so I pulled it back up here to make just, see, gross profit should be down here, but it's up here, so they left out the labor has been left out of this. So this should be a direct cost, just like the material is a direct cost. Okay? Because you got your sales up here, you got the direct cost down here, so that should include your labor and your material and sales commission. Okay, those are direct cost. Commissions aren't earned until we've installed the job. So it's directly affected to the job is why it's called a direct cost. And the plumbers there, the HVAC technicians there, the electricians there, they're on the job site, so they're directly related to the job. Okay, now overhead folks like dispatchers and managers and what have you, that's an overhead expense. Okay. And there's a direct overhead expense, and then there's payroll tax. There's overhead expense, and then there's also payroll tax on that overhead expense. But that's a combined labor cost when you add those two together. That's the true way to look at it. Okay. I hope it didn't confuse you too much. I think you're getting it though. Matter of fact, I know you're getting it. All right, brother. Give me a call if you got any questions at all. Okay.